I've uploaded a couple of videos on cryptocurrency tax, and three key areas come up as the most important questions people want to know the answer to. Those are: how do I deal with transaction fees? How do I deal with foreign exchange? And how do I deal with transactions which are between two different cryptocurrencies? In today's video, we are going to address these three key questions and help you make sense of them. Let's get into it. How's it going, guys? Ryan here and welcome back to another crypto video. Today we're taking another look at crypto tax and how you deal with a few of the tricky questions which have been asked on my videos in the past. How do you deal with transaction fees? How do you deal with transfers between two different cryptocurrencies? And finally, how do you deal with foreign exchange? But before we get into that, guys, please remember to leave a thumbs up if you do enjoy today's video, and let me know down in the comments section below if there's any other cryptocurrency questions that you may have. I'll try my best to help you, and if I think it's warranted, I'll make a complete video on it to explain the nitty-gritty. As well, if you want to see more of these sort of videos, we cover crypto, investing, stocks, and wealth management. Make sure you subscribe to the channel and turn on those bell notifications. But without further ado, let's get straight into today's explanation. Kicking it off with the first question: how do we understand the profit or loss when dealing with different currencies? And this is a focus on foreign exchange rates. When you're buying or selling crypto, you might not necessarily be dealing with the native currency of your country. You might be on a foreign exchange. For instance, if you live in Australia, there is a very likely potential you might be dealing with US dollars a lot. So how do we deal with those? Well, effectively what we do is we simply convert the taxable amount into native currency using daily Forex rates. Let me give you an example of this. If you live in Australia, you're going to owe the Australian Tax Office money if you make a profit on a cryptocurrency. But let's say you are purchasing cryptos in US dollars. So, for example, if we take coin A, which was purchased using USD at US $100 per coin on the 1st of January, we then sell coin A for $110 US on the 7th of January, we have effectively made a profit of $10 US. On the day of the sale, when that taxable event occurred, the USD to Australian dollar exchange rate on the 7th of January was $1.10 Australian for every $1 US. Therefore, we need to calculate exactly what the amount of US dollars was in Australian dollars in order to work out our native currency profit. To do this, simply all you do is take your profit in US dollars, take your exchange rate, so $1.10 Australian, and that will give you the number. In this circumstance, what we're looking at for this example is 10 times 1.1, which will effectively give us $11 Australian. The key is to remember you owe tax when a taxable event occurs. So if you sell a coin for money, that is when you are going to be owing tax on that coin when tax period comes. Now, if you're looking for foreign exchange rates, a lot of exchanges do actually have a record of exactly what the exchange rate was for that day. If not, what you need to do is basically go onto the internet, find a Forex rate for the day, and if you're doing this in the past, you can look this up historically as well. Record that down and make sure you gather as much information as possible for Forex when it comes to tax time. The next area we will look at is crypto to crypto transactions. So for instance, if you bought one Bitcoin and traded it into 10 Ethereum, for example, that would be counted as a crypto to crypto transaction because there is no fiat currency involved. Now, we're gonna just go through the basics now and get into the nitty-gritty of it a bit later in today's video. But how do we understand the value of crypto to crypto transactions in fiat currency? This is a question I hear a lot, but all you're doing is simply converting each coin or value to fiat currency. For this example, we are only using the basics. We're not taking into consideration things such as transaction fees or any other costs that might be involved, and we're taking it from the perspective of an individual. So let's say, for instance, our purchase date of coin A was on January the 1st, and that was purchased for $1,000 Australian. Then we wanted to do a transfer. The transfer date is in the future, which is on the 7th of January. It moves to that day, and basically we decide we want to transfer coin A for coin B. Now, since that period began, coin A's value has appreciated. In fact, it's doubled in size. So coin A is not worth $1,000 Australian anymore. It is now worth $2,000 Australian. Coin B at the time of the transfer is worth $500 Australian, so a quarter of the value. That means I can exchange one of coin A for 4 of coin B. As a result of this occurring, effectively what we've done is a taxable event because we have sold coin A for coin B. This has, as a result, resulted in a profit of $1,000 Australian, and this is the amount we would owe tax on. We will get a bit more into depth with this very soon, but the basis is you need to understand the intrinsic fiat value of that currency at the time of the taxable event, as well as the currency of whatever coin you are purchasing, what is their intrinsic value in fiat dollars, and work out your profit based on this. And a lot of the time, as I say again, crypto exchanges will have some sort of a transaction ledger in order to help you do this. But this is very important because it's not typically something you see. Effectively, you're almost trading one asset for another, or one asset for multiple assets, or multiple assets for a single asset. So you just need to understand what is the value in fiat currency of each of those different assets, and you'll be able to determine whether or not you have made a profit, a loss, or potentially even broken even on this transaction. Let's now take a look at transaction fees, and these are a major part of every single transaction that occurs, whether it be a buy, a sell, or a transfer on any exchange. Anything you do is going to involve some sort of a transaction fee. A transaction fee is deducted for each transaction that occurs, which is why it is also one of the most common questions which is asked. These are not necessarily claimable if you're an individual. If you're a business, there are setups where you can do that, but instead you should be deducting these from any transactions. So for example, if you have a transaction fee, you can deduct that from your potential profits, because obviously you're not making money. It is a fee, it is being taken as a cut, and you've not made that money which has been taken away from you. I have a few examples to explain this point further. The first, we're going to focus on a scenario where we are buying a cryptocurrency. So let's say coin A, which is the coin we are purchasing today, has a cost of $1,000. In order to buy $1,000 worth of coin A though, there's a transaction fee on the exchange we're using of $5. That means coin A of $1,000 plus coin fee of $5 gives us our total cost, which is $1,005. Tax will be owed on profits only made over $1,005, not $1,000, because you've got to take into consideration that $5 is part of the overall cost. Let's say we now sell this coin. So the total cost of coin A, as we know, was $1,005. Since the point at which we purchased coin A, the value of coin A has appreciated to $2,000. If we want to sell coin A, we will obviously incur another transaction fee, which is once again of $5. Effectively then, the sold value of coin A minus the total cost of coin A minus the next transaction fee gives us our taxable profit. So in this example, if we have $2,000, that is coin A, that is what we sold it for, minus the total cost of coin A from when we bought it, minus the transaction fee that is occurring due to this sale, that leaves us with $990, and therefore tax is owed on those profits of $990. Now let's revert back to a crypto to crypto transaction. In this example, instead of selling coin A, we're instead going to swap it for coin B. So once again, the total cost of coin A, as we saw in our buying example, was $1,005. The current value of coin A is still $2,000, so it's appreciated that amount obviously, and the current value of coin B is $500. This is the coin we will be swapping it for. In order for the transaction to operate correctly, there will be another transaction fee of $5. So what we do is basically we take the value of coin A minus the transaction fee. So $2,000 minus $5. We then divide that by the value of coin B, which is $500. This effectively will determine for us the quantity of coin B being acquired. Now, due to the transaction fees, this isn't a straight swap. So instead of potentially, eliminating transaction fees and getting 4 of coin B, we need to take them into consideration. So as a result, due to the amounts of money we're dealing with, we only get 3.99 of coin B. Now, how do we work out the profit or loss made on this? Well, we take the value of coin A, we once again take away the total cost of coin A, and we then once again minus the transaction fee. This will then give us the profit in acquiring coin B. So $2,000 minus the $1,005 cost minus $5 gives us $990. That means therefore we owe on our profits tax for $990 in acquiring the 3.99 of coin B. This is obviously the basics of it all, and there might be many other different elements involved, but use these equations as your basis for working out exactly how you're going to determine how much money you owe. Obviously, when you start bringing in, foreign exchange rates, different transaction fees, there might be other costs involved for whatever reason as well. You need to just understand that what you're effectively doing is converting the value of one coin and another coin into fiat currency, working out exactly what the value of that is from a profit or loss perspective, and that will effectively give you the amount of money you owe to the tax department for that financial period. I hope you found today's video useful, guys. If you did, make sure you leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on bell notifications. We cover crypto, stocks, investing, and wealth management. I'd also love to hear any other questions that you have about crypto or crypto tax down in the comments section below. And of course, if you're looking to buy any cryptocurrencies, I have a link down in my description for CoinSpot where you can sign up and start buying right now. But I'll leave it there, guys. I hope you have an awesome day. I'll see you next time. Cheers.